pads and pins because I'd like to extend an invitation to first. Destroy that like, click the subscribe button. Did you know that if you own a certain amount of Tesla stock, you might be able to coast into early retirement in 2025? It's no secret that many people see Tesla as a way to retire, looking to know if investing in Tesla can help you realize your dream of an early retirement. Look no further. We've got you covered. With Tesla's stock price surging in recent years, many investors have been wondering if owning stock in the company could be their ticket to an retirement. This video will explain how much Tesla stock you'll need to retire by 2025, and we'll also discuss the potential risks and rewards of doing so. Before you strap in and prepare to discover how Tesla might assist you in reaching your financial objectives, grab onto your ease sooner. Those who are interested in this idea should follow the company's progress to learn how Tesla might help them achieve their goals. To find out how much Tesla stock you'll need to retire by 2025, watch the video below. Whether the company's stock is undervalued, Tesla has collaborated with other businesses to grow its customer base and output. Adam Jonas, Global Head of Research at Morgan Stanley for Cars and Shared Mobility, is a big fan of the Tesla 2. Stanley raised its price forecast for Tesla shares from $1,200 to $1,300 in response to this year's $2 million delivery forecasts. Morgan Stanley analyst Adam Jones has followed Tesla for many years. He has usually been optimistic about the firm and its development prospects, but he has also voiced worries about the company's valuation and the possibility of more competition in the electric vehicle market. In a research note from February 2021, Goldman Sachs analyst Noel B. Delaney, who has also been generally bullish on Tesla, increased his price target for the company from $700 to $860, citing the company's strong demand and potential for increased adoption of electric vehicles as reasons for his optimism. In a research note from February 2021, Dan Levy, an analyst at Credit Suisse, downgraded his rating on the stock from neutral to underperform, citing concerns about the company's valuation and the possibility of increased competition. Despite these concerns, he did point out that Tesla is a market leader for electric vehicles and has a strong brand that could help it weather any challenges. Even Dan Levy increased his price and remained optimistic about Tesla stock target from $11.25, asserting that the stock's present decline is a great time to buy. According to Levy, Tesla should outperform Wall Street's projections. Renowned American stock picker Cathie Wood predicted that Tesla would be valued $3,500 by 2025. What is the name of the founder, CEO, and CIO of ArcOnvest, a $60 billion business that invests in technologies like genomics and self-driving cars? Despite the fact that a professional predicted that Tesla's stock price will surpass $2,500 by 2025, the stock price of the leading EV manufacturer is expected to rise in response to increased sales. So this prediction proves correct. Tesla stockholders may see a sizable return on their investment by 2027. However, this prediction shouldn't be completely discounted because it was based on a careful analysis of the EV company's past market performance and anticipated future growth. There are valid reasons to feel hopeful. Developing software on custom hardware is how Tesla builds automobiles, much as how Apple makes the iPhone, or how, because Microsoft depends on Intel chips and Dell PCs, Tesla is able to update the software on its cars every few weeks. This is in stark contrast to the traditional auto industry model, where the product is fixed for the duration of ownership. Because Tesla cars have fewer parts and require fewer expensive oil changes than internal combustion vehicles, their total cost of ownership is significantly lower, maintenance or replacement. Parts per vehicle. Traditional automakers are aware of this since their service operations account for a sizable chunk of their income. Although other automakers are also attempting to acquire electric battery expertise, they will still be lagging behind in this expanding market. From a marketing standpoint, Tesla has a clear advantage in certain areas. Who wouldn't want to own a vehicle that produces no emissions, eliminates trips to gas stations, and is environmentally friendly? Tesla's battery-powered cars are significantly simpler, with only about 20 parts per vehicle. This simplicity results in a significant reduction in the total cost of ownership for consumers. Additionally, Tesla has acquired battery manufacturing companies and intends to integrate innovative battery-related technologies into its vehicles for the foreseeable future. Other manufacturers will probably find it difficult to catch up on this front and align the circumstances. What will happen next for automakers? While traditional automakers plan to offer more electric vehicles in 2020, these models might not be software cars. Instead, they're likely regular cars that have had their electric motors installed. Of course, there are security risks associated with software cars, just like there are with any connected device. But Tesla could take the lead by showcasing how these risks can be effectively managed. What is your opinion on investing in Tesla? While most people are unaware that they will require a solid financial foundation based on profitable investments in order to retire comfortably, no one can truly say they aren't looking forward to retirement. Investing in growth firms, for example, could yield profits if you buy them at a high enough price to meet the high expectations that investors have of it. Tesla is working hard to demonstrate its accomplishments to both groups of people. The company plans to use the funds raised to build a sports car, an affordable car, and other vehicles. By 2026, it is anticipated that Tesla's robot taxi business will generate more than half of the company's EBIT day and contribute 60% of its estimated value, despite having much lower margins than revenue from robo-taxi services. ARK Invest claims that the business has been developing practical AI solutions and unveiled the Optimus humanoid robot on AID. They predict that, over the course of the simulation set, electric vehicles will account for 57% of the company's overall revenue by 2026. According to annuity.org, Tesla has arguably made a name for itself in the market by this point, and despite the fall, its performance suggests that the EV company will continue to perform well. Many Tesla bulls support the company's mission to create a cleaner, more environmentally friendly globe and want to retire affluent as devoted Tesla owners. May one day offer a suitable retirement alternative, considering that the average monthly income needed to retire comfortably in certain locations is at least $4,100. Given that the typical retirement income in the United States is approximately $47,000. For folks in other places or with more expensive tastes or hobbies, $4,100 per month might be sufficient to cover basic living expenditures, including rent or mortgage payments, utilities, groceries, and transportation costs. Assuming an average cost of living in the United States, $4,100 per month might not be sufficient to cover all costs. However, given specific circumstances, the precise breakdown of expenses will vary. $4,100 per month could cover rent or mortgage payments, utilities, groceries, transportation, and some entertainment or leisure activities. Due to arbitrage, which allows us retirees to extend the value of their retirement assets to countries such as Panama, it's critical to develop a budget based on your specific needs and income to ascertain how far $4,100 per month can go for you. Mexico, the Costa Rican. If you plan to retire in 2030, but need at least $4,000 per month in retirement income and want to stay in your current country, you'll need retirement savings of at least $1 million. Many Americans are choosing to spend their golden years in Portugal and even Thailand. Your savings will need to be adjusted for inflation using a typical 5% withdrawal rate. This is great news because if the company continues to grow, Tesla shares will increase in value over time. This means that even if you continue to spend 5% of your retirement savings each year, your investments will last for a very long time. If your financial goal is to retire from the workforce by 2030, buying Tesla shares is probably the best investment you can make right now. In summary, a few years ago on November 2, 2016, Tesla was trading at almost $38 per share, due to the stock rising from 5.74 cents to 12.29 over time. The value of a one-time investment in Tesla made in November 2011 would be close to $240,000 today. This is a return of more than 20,000% compared to a return of 35.740% from a comparable investment in the shrubber tea. What do you think of this? Comment below. Please let us know once again. Make sure to hit the like button and subscribe on our channel so we can see you in future films.